Hello traders, James Stanley with StoneX and Forex.com. Last week, something finally happened that I had been waiting on for weeks and perhaps even months. And as a technicals trader, it's beautiful when these things pan out in the way that it did. But I wanted to take a closer look at gold because I think that gold is trying to highlight what might be around that next corner. And if this does continue to come to fruition, there could be a trend that we could work with for months and maybe even years if we judge what happened in the last couple phases of gold. So in gold, it's that 4K level. I've been harping on this for a while now. And to give the full backdrop, this is a bullish trend that was, well priced for a couple of years. It started back in 2024. The start of that is notable. That was the Austin Goolsbee, let's not get all flipped out about inflation speech. And you could see it kick-fired a trend that just took a couple of pauses along the way. And those pauses along the way usually came along with a less dovish Fed or with stronger inflation. But, after Trump got inaugurated in January of 25, this thing really just went into like hyperspeed. And I think there's a lot of reasons behind it. And I think that those reasons started to come to a head or possibly come to a head earlier in the year as we started to see inflation tick higher. Interestingly, gold has often been looked at as like a war vehicle or an anti-risk vehicle in times of war or stress. And interestingly, it was right around the whole scenario around Iran when this thing got splashed and just continued to sell off. So, it kind of goes to show you conventional wisdom doesn't always hold true with market trends. But I'm of the opinion that what we saw here was basically just an overbought move paring back as you had momentum traders suddenly with a reason to take profits. And, again, as a technicals trader, it's what was happening underneath the surface that made this so utterly interesting. Prices splashed down. Initially, they didn't want to test 4K. You could almost see where there was still that latent buying demand after the initial pullback here. And we held like 4,100. But that bounce up to a lower high, we just merely got right back down to 4K again. But 4K was that line in the sand. You see this on the weekly chart, that buyers continually came in to defend. But more pressing, and this is something I covered in the video a week ago, was these higher lows that had started to build, right? You could almost see that bullish anticipation as buyers are getting so greedy that they're willing to take some excursion. As in, price gets down, it approaches that prior low of like around 39.50, but they don't even want to wait for fear of missing out. And so they jump in a little bit earlier. That's what gives us a higher low. It's that very anticipation that can lead to a fresh trend. But again, like I said in the video, lacking bearishness is not a bullish reversal. For that, you need a catalyst. For that, you need a reason. For that, you need buyers to take a step forward, and they usually need to be motivated to do so. That's why, just a week ago, right after the Fed, I tweeted this. Timing on gold, always a bit of a wild card on shorter terms. It always is. Markets are not predictable. Even if you have the trend, you can still end up upside down in many ways. But when we see items like we saw that week, with the Fed posturing around a rate hike that they don't really want to do, or Japan lighting cash on fire to avoid hiking, and what I didn't know at the time yet was that the Treasury Department had jumped in on the dollar-yen matter as well. So it's like monetary mayhem. It just makes the long-term fundamental backdrop that much more enticing. And you can see right around that time is when the breakout had just begun as we were getting back above that 4,100 level. Now, we did have a subsequent retest of 4021 around last week's open. But that's important because notice what happened. More of that bullish anticipation, more buyers coming in. At this point, not even allowing for a 4K retest. We had a 4K retest right around the Fed. Couldn't get back down there. You can see that bullish anticipation taking over. And then last week, that's when buyers finally took that next significant step forward. And, if you look at the headlines, they're hunting for reasons why, and they often don't know. But I think the reality of it is fundamentals just aren't a perfect push point for price, and we often see these things on like a delayed fuse, and I think that's what's happening in here. Now, notably, I think gold has an amazing way of trying to look around the next corner, and I think that's why the rally that is still ongoing today really started back here in 2024. Now, at that point, the Fed was continuing to say that they were dovish, that they wanted to cut rates, and inflation was way too high. You could see around the December FOMC rate decision, right in here, when the Fed was projecting that we were in fact going to get rate cuts in 2023, you can see where gold popped above 2K, and it didn't really go below there until an above expected CPI print here, Tuesday, February 13th. And markets all of a sudden, we're starting to question whether or not the Fed's going to be able to cut. Ultimately, a day later, Austin Goolsbee, Chicago Fed president, comes out, says, let's not get all flipped out about one inflation print, seemingly dismissing the data that did not go his way, basically justifying, lawyering a case for why the Fed's going to cut rates. Gold sees around the X corner, and it rallies in a very big way. Very big way. And continues to rally all the way into just about a week before the presidential election. Just some pauses along the way. Now, at this point, the move had gotten so incredibly overbought as we came into 2026, even with Trump pushing the narrative for more rate cuts, even with inflation relatively high, that there was reason for longs to take profits. And that's what built this falling wedge formation. Falling wedges are bullish reversal formations. They come about because sellers are unwilling to stretch at fresh lows. It's essentially a trend dying that could possibly shift. But for that to shift, you need bulls to start taking that step forward. And that's what happened last week. Now, at this point, we have the possibility of fresh trend. What is going to need to happen to substantiate this is twofold. One, I think we're going to need to see CPI come out relatively soft. If it comes out hot, if we see these rate hike odds pop back up again, then that could question the narrative behind what has been pushing gold. But if you look at these rate hike odds, it's been only, and I'm updating it so we have the most recent picture, it's been only moderate softening in those rate hike expectations into the end of the year. And that's what helped to fuel this run in gold. Right now, there's a 23.9% probability of no hikes by the end of the year. If we go back a week ago, we were at 12.1%. So we've seen odds of a hike whittle down only marginally. Odds for a flat Fed have only gone up, is that about like 11.8%? If we see more of those rate hikes price out, and I'm not even speculating about rate cuts, but if we see more of those rate hikes price out, more rocket fuel for gold, more reason for dollar yen weakness, a whole smorgasbord of concepts that could come together. But for this one, I want to focus solely on gold. That's the first thing. Soft CPI, lower probabilities of rate hikes, higher odds of the Fed's flatten to the end of the year, which I think is going to ultimately happen anyways, even though it does seem as though there's some fracture at the Fed right now, possibly across political fault lines, but that's another item altogether. But secondarily is we are going to need to see bulls step back in to support a pullback. At this point, if you look at gold, let's go down to like a shorter term chart and look at this from like a oversold, overbought perspective. If you go down to like a 4-hour chart, this thing is already not only overbought, but overbought and diverging. Not a good time to try to chase the long side. Get a bit of a pullback though, get this softened, get this out of overbought territory on RSI, and keep RSI on the daily from overbought territory, then it becomes a bit more attractive for continuation setups. But the zones that I'm tracking for next week, and I followed this in the 5 charts for next week video, I think 4,300 is most ideal. Like you want that bullish anticipation to be so great that it tests at like 42.99, 42.95, elicits that greed that gets buyers to jump in, even if they might have to take some excursion. Secondarily, 42.50 I think is still workable. Notice how messy the support was down here. So if we got a test at 42.50 and held a higher low, I think it similarly could justify that bullish anticipation, that excitement on the long side of the trade. A bit deeper, these zones I'm not as aggressive with, but just from a technical perspective, it would still be clean for a pullback to find support at prior resistance. This zone runs from like 4,200, 4,220, and then I got another 4,160 to 4,180, and then another from 4,100 to 4,116. If we get below that, something's shifted, something's changed. And I have a litany of scenarios to work with here. I'm not expecting, well, at least these latter 2 zones to come into play unless this inflation is really soft next week and unless we see those rate hike odds firm up a bit. But, again, given the marginal softening that we've seen in those rate hike expectations, with the move that we've seen in gold, if we do see those rate hikes get priced out even more, I think gold is in a position where it can fly. And I think that makes the argument behind the long side of gold even that much more attractive. I think one of the big concepts of what has kept this supported at 4K is the idea that central banks are diversifying reserves into gold. And if you have USD dropping, especially if there's like a tie-in with the dollar yen carry unwind, there's even more reason for central banks to try to load the long side of gold. And I think that's why 4K was supported so well here. That, my friends, is what I have for this week. That's what I'm looking at in gold. As always, thank you for your time and happy trading.